name is Kevin Scorsone. I'm the Government Affairs Director here at RRAR. This is a joint event with GPIC and DEI, so we have a couple of notes before we get started. First off, I want to acknowledge our two committee chairs, John McBride from GPIC and Brooke Buchanan from our DEI committee, so thank you to both of them for being here. At RRAR, we recognize that diversity, equity, and inclusion are essential to all aspects of our work, including our support for those who have served in the armed forces. It's essential to address the unique challenges faced by veterans, particularly those from marginalized communities. Approximately 43% of veterans experiencing homelessness are people of color. These disparities highlight the critical need for targeted support and resources to ensure all veterans have equal access to housing and the benefits that they have earned. Today, our distinguished panel will provide valuable insights to help members better assist veterans in achieving homeownership. The Government Policy and Issues Committee is focused on member education on legislative, regulatory, and political matters. Reaching out to private businesses, political organizations, and government officials and staff to make recommendations on pressing issues facing the community is key for this committee. Through in-person interviews and candidate surveys, committee members recommend Realtor champion candidates to the Realtors PAC Committee for Funding, and we will be hosting those interviews in July. We'd like to thank the NC Homeowners Alliance for the grant to put this event on today. The NC Homeowners Alliance represents the interests of property owners in the General Assembly and raises awareness of issues and legislation that affect consumers' most important investment, their home. The Alliance will keep you up to date on legislation that will affect your bottom line, and they will also let you know about opportunities to make your voice heard in the conversation surrounding your home and its costs. You can join this free service at ncrealtors.org/NC Homeowners Alliance or follow on Facebook and Twitter at NC_homeowners. Before we get to our panelists, if our sponsors are out in the hall there somewhere, I would like to invite up Felice Mitchell from Central Bank, DEI's 2024 sponsor, to say a few words. Please.
Good morning, everyone. My name is Felice Mitchell, and I am Community Development Officer for Central Bank. I'm happy to be here with you today. This is a very important topic. It's a very important group that we serve, and we proudly at Central Bank want to serve those who protect the freedoms that we all enjoy. If you have any questions about the VA loan or need some information about our portfolio products, please don't hesitate to stop by the table and ask me your questions. Have a wonderful day, and we're going to enjoy the information this panel is going to provide. Thank you.
All right, next I'd like to call up Cedric Burke from Cross Country Mortgage. Cedric and Cross Country Mortgage are GPIC's 2024 sponsor. Let's give a hand to Cedric.
Good afternoon, everyone. Good to see many familiar faces. This is an advocacy and a partnership we're very passionate about and very excited. I'm very excited to introduce to some of you our cat lady lender, Crystal Vroman, who will be a panelist today. And she reminds me daily of the importance of veteran advocacy and the amount that these veterans have worked to deserve, true advocates in the home buying process. So this is a big part of our mission. Civic engagement and all these things in general, but very happy to hear from these panelists today on a very important subject. So thank you again.
Today we're fortunate enough to have veterans on this panel, but I wanted to take a moment to acknowledge if we have any veterans in our audience today, please stand and raise your hand. We'd love to get started, so without further ado, I'd like to welcome up Tim and Crystal, Tim Mock and Crystal Vroman, to be our panelists today. Before we get started, we'd love to have Tim and Crystal introduce themselves, talk a little bit about themselves, their career, and then we'll get started with our questions here.
Hey guys, some of you may know me, I've been here before, but if you don't, I am Crystal Vroman. I am the cat lady vendor. I work with Cross Country Mortgage, and one of the things that actually brought me to Cross Country Mortgage was the flexibility that they gave me to set my business up the way that I wanted to, and to do the things that I wanted to do that were most important to me. And one of those things is continuing to serve the folks that served me and the folks that I served with. So they let me set up my fee structures. I charge no fees to veterans. Really am allowed to do pretty much anything I can for a veteran or active duty service member here. This is something that's really important to me. I'm also the president for the Raleigh Mortgage Bankers Association. So if you guys or any of your lender partners are involved in RMBA at all, we'll see you guys there next week. I was a cryptologic linguist for the U.S. Army. Loved my job, thought I would have retired doing that, and unfortunately, some of you may have seen me hit the doors on the way out of here. I'm blinded one eye now, and that is why I'm out of the military, just a little bit younger than the rest of us. But I love my service, continue to fight for my guys who are still in, and the ones that are living in our communities with us that go unrecognized.
Awesome. Hi, I'm Tim Mock. I'm to be here today. Thank to all of you for being here, because that shows us that you have a commitment to serving your military buyers and sellers, which is great. So thank you for that. I was honored to attend and graduate from the Military Academy in 1984. I served active duty in the U.S. Army for 6 years as a field artillery officer, serving in Fort Ord, Monterey, California. Officer basically advanced course at Fort Sill, Oklahoma. My last tour of duty was at artillery headquarters just outside Istanbul, Turkey, where we were safeguarding 8-inch nuclear weapons rounds at 6 detachments within Turkey, both in Europe and Asia. The Berlin Wall came down that year, 1989, and I understand a couple years later, all those nukes were pulled out of Turkey as the Soviet threat went away. But I continue to serve now. You see I'm wearing my American Legion hat. I have been Senior Vice Commander, American Legion Post 187 Elite Force since 2018. I tell the commanders I'm there to give them false hope that they're ever going to give up their job. Because I told them it's a big commitment of time, and I won't be able to do that until I retire. And I'm in order to do that. I love what I'm doing too much. But American Legion is a great organization that serves veterans and the community. So I'm honored to work with them. Right now, a client of mine is a 90-year-old member of our post who's a Korean War veteran, and his home is under contract. And I'm doing it on behalf of my commission to the American Legion. So I'm honored to do that. I encourage you to continue to serve veterans in any way you can, support them, whether buying or selling. Make sure they understand all the benefits to which they are entitled.
Yes, sir. Tim.
So we have a bunch of questions for our panel this morning, and then we will open it up for audience questions at the end. But thank you all for being here. Great job here at the association. Nice to see everybody. So let's begin with a question. Might seem obvious, but should be addressed. What is the impact and importance of putting our veterans at the forefront to be able to secure housing?
Well, you got to remember that they have, especially post 9/11, when they enlisted, knowing they were going to combat, and they put their lives on the line. They were, they may not, a lot of them were not killed, thank God, but they were prepared to lay down their life for their country. And I think the good news is the benefits they got, the GI Bill, is far better today than it was when I served, and God bless them, they deserve every bit of that. And then we've got the VA loan benefit, and it's important that they know about the VA loan benefit, what the eligibility is. Seems like a lot of the veterans I'm working for today, they may not have visible injuries, but many of them have a VA rated disability of 30% or more, which means that the VA funding fee is waived for them, which is great. That's a great benefit when it's waived. But it's important to understand that they understand what benefits are available, how to become eligible for them, and even more importantly, educating agents and sellers of the benefits of the VA loan and dispelling some of the myths and concerns about it. Because during the pandemic, it was near impossible to get a seller to consider an offer with a VA loan. That is changing. I'm very happy to see that. I don't think that it's not negative now because there aren't as many buyers out there. But we still have a long way to go in communicating the benefits and getting folks on board. Good example, I have listing under contract, my client, 90-year-old Korean War veteran, sitting down and reviewing the listing agreement with them and talking about the loan choices that folks would have when applying. And I mentioned the VA loan. He says, oh, well, do I want to allow that? I mean, isn't that just asking for trouble? And this is a Korean War veteran, but he served 70 years ago. And dispelling the myths around that and saying, you know, given the condition of your house and the repairs you've done, I'm not concerned anything is going to get flagged by an appraiser or home inspection report in terms of that. So I said, you know, turns out the buyer's paying cash, but he was definitely open to considering a VA loan.
I can yell if that's better. You guys tell me. So really based on that question, you know, as a veteran myself, I think that that's a two-part answer, right? Why is it important that we have housing benefits for veterans? I think you have the moral question of, do you think that there is a need or that they have earned something with their service that we should outstretch our hands and do something for them? That's the moral side. But then there's the socioeconomic side, which is not any different than any other desperate class, right? We put a lot of time and effort, especially through RRAR and our different committees that you guys are working with here, to make sure that the housing needs of all communities are being met. And a lot of that is based on socioeconomic standing. But nobody takes into account the socioeconomic standing of the veteran class, of the service member class, right? You have to think that many of the people who are either actively serving or who have gone out of the service, you know, their best years, their formative years were different than the rest of the country, right? You got 1% of the 1%. That's who's actively serving. Okay, so when you look at those formative years, you know, the challenges that they're facing are very specific to that lifestyle, right? They don't stay in one place for 10 years and build equity. They have to move for their job, right? They're not able to put money down somewhere and then necessarily stay in that community and pour into that community because they're called out, and so are their families, and so are their support systems. In addition to that, you know, you also have when they're out of the military, we're speaking of veterans specifically, not active duty service members, when they're getting out of the service, well, those are service contracts. Your contract can be 4 years, 6 years, 10 years, 12 years. You may serve a full 20 years, retire in 22 years. But those are people who are just now joining the civilian workforce, right? When many folks join the civilian workforce at 18 years old or right when they get out of college. Now you've got these people who essentially are going to college when they're in their 30s, right? They don't have the middle manager's salary that a 30-year-old first-time homebuyer may have in a different socioeconomic background. So I do think there's two different sides to that. I think if you want to take everybody's emotion out of it, you can just look at the facts and what their income background is, what they're paid. An EOD tech active duty gets paid very little money compared to someone working on electronic ordinances for the government, or God forbid, for the private sector. That's a six-figure job. Our folks are actively getting paid at an E4, E3, E6 maybe. Those guys are making less than 75 grand a year. where their competitor, the exact same age with the same education working in the private sector, is triple that income.
Thank you. So, I had this for a little bit later, but you both brought up the VA loan, so why don't we dive into the VA loan process and let everybody understand how that works. So my first question, and I have a bunch of follow-up questions to this as well, so this will be focused on the VA loan. What are some common challenges specifically that veterans face when applying for a VA loan? And how can they be best prepared to navigate this process, both them and the agents that are representing them?
So I will speak to the loan side first. So challenges that veterans face, honestly, there's a lot of lack of education on both sides. From the actual veteran who has gotten out of the military and active duty service members, and then as well as either the facility they are going to acquire the financing, or unfortunately, some of the real estate partners that they're working with trying to utilize that benefit if they do have it. Now, with acquiring a VA loan, VA loans are fantastic, there are a lot of benefits to it. However, oftentimes people are told that they should wait until they're out of the military to purchase a home because they do move often, because they get orders, because they don't know where they're going. The problem is, once you know that you're getting out of the military, you're usually within 12 months of your EAS or ETS, depending on your service, right? That's the end of time in service. But with a VA loan, if you're within 12 months of the end of your time in service, you can't use any of your military income to qualify for a house. So if you're telling people that they should wait to buy a house until they're out of the service, then they don't have any income to qualify. So that can be an issue as well. Oftentimes there are a lot of myths, and some of those myths include, credit items. There is no minimum credit score for a VA loan. Not one. The VA has no minimum credit score for a VA loan. Do not go and text your lender and tell them Crystal Vroman said that they were a liar, okay? Because different lenders have different minimum credit scores. There is no minimum credit score for a VA loan. That is going to be based on the investor, okay? You may have to pay 5 discount points, and the veteran can't pay that, so you better get the seller to pay for all those discount points to get them any interest rate at all. But there is no minimum, okay? You can have more than one VA loan at the same time. There's still a lot of myths that are around it, and so I think having someone who is a subject matter expert, having real estate agents who can provide you with a partnership and go, hey, this person really specializes in what you're doing. You don't go to an ENT when you stub your toe, right? And there's a reason for that. Now, from the realtor side, they have a lot of different strategies when dealing with VA buyers as well as VA sellers. If you're trying to sell your home and you're selling a home for a veteran and that veteran does want to make a subsequent purchase, there's different strategies that are in place as far as using their entitlement, making sure that you've got that entitlement there. If anybody brings up loan assumptions, please take my card on this table and email me separately, because we do not have enough time today to talk about those assumptions. Assumptions are a great thing as well, something that real estate agents need to have the education about to properly lead their clients. When I bought my first house, I had my very best friend in the whole wide world, who is a proud RRAR member, and I love her to death. And we made 12 different offers before my offer was finally accepted, and I actually had a listing agent on speakerphone in my buyer's agent's car who didn't know she was on speakerphone, and who literally said, well, we don't want to work with a veteran because they're poor and don't have any money. Mind you, I'm also the mortgage lender. I'm the pre-approval lender. I'm like, I could buy this house in cash. What are you talking about? But that was the sentiment of, well, they don't have any money, so we just don't want to even negotiate with you. And so I think those are some of the challenges that they face. Now, those are separate from the challenges of a VA loan. Realistically, I think if we told all of you right now, would you guys all raise your hand and say, oh, the appraisal is the worst thing ever? Good. That is a large misconception as well, right? Your minimum property requirements in that chapter 12, and I will message me and I will send you the whole chapter 12 guideline. It is almost identical to HUD guidance. Very few differences there.
One of the challenges that we have is representing a veteran is advising them on their loan options and what is best for them in terms of getting an offer accepted. And I'll be honest with you, during the pandemic, I actively discourage veterans from applying, putting in an offer with a VA loan. But based on my experience, it was a long shot anyway, because they don't have the physical assets, the monetary assets to make a strong offer. And then there's so much misconceptions about the VA loan that even worsen their odds. But I think that's changed today. I don't feel that way today. I think they should take advantage of that VA loan. It's a great benefit. And our job as buyer agents is, picking up the phone, calling that listing agent and explaining to them the benefits of VA loan, why they're using it, dispelling, as Crystal said, the myths around the VA appraisal. I get accused of being a little more that cried wolf, because when I'm showing a house to a veteran, I'm identifying things that the appraiser is supposed to be red flagging, like rotted wood on a deck and that type of thing. And the reality is, rarely do I see those come up and called out on a VA appraisal. I don't know why. I mean, I know what the rules are, but I think a lot of appraisers are worried of being the cause of the deal falling apart and the veteran potentially losing the due diligence fee. So oftentimes, again, I make my clients aware of what should be flagged, but the reality is many times it is not. So again, I can't explain why that's the case. And then very quickly, in terms of Crystal's correct about the loan assumption. I have a fellow West Point grad under contract on a house in North Raleigh since December. He was attracted to it because he wanted to assume the 2.25% VA loan rate. 6 months later, we're still waiting for Freedom Mortgage to make a decision. So I found the link and I filed a complaint to a government agency 2 days ago because the rules are that they have 45 days to make a decision. I read that, and that's not what's happening out there. So I'm right now I'm cautioning both my sellers and buyers who have a VA loan involved to be very cautious about seeking a loan assumption, because it could take a lot longer than you want to. Unfortunately, my buyers have been leasing that property that entire time at a lower rate than their loan's gonna be. So it's actually working out well for them. The seller's pulling their hair out, right? So do your research on the lender before approving VA loan assumption, either as the listing agent or as the buyer's agent, because it may get tied up based on my experience.
I teach an assumption seminar. Just DM me.
What about, can everybody hear me?
Yeah.
What about, so we talked about challenges, what about benefits? Flip side of that coin to a VA loan for people that are working with it for the first time.
Fabulous benefits for VA loans. Whether you're working with VA loan for the first time, second time, third time, doesn't matter. You can have multiple VA loans out at the same time. That is one assumption that we should just get rid of right there. You can have multiple VA loans out at the same time. Obviously, the benefit everybody knows is you need no down payment with a VA loan, okay? Now, caveat to that, star asterisk, okay? If you have a cosigner who does not have VA entitlement and is not your married spouse, right, and you need that cosigner to be on your VA loan, you will have a down payment requirement, but that is part of the between, just a little side star asterisk there, okay? There's no mortgage insurance on a VA loan, no monthly mortgage insurance. Now, similar to your FHA loans, your USDA loans, right, you do have a HUD funding fee, but there's no monthly payment, okay? That funding fee is also waived for anyone who has over a 10% disability rating, okay? So, you have the ability to have absolutely no mortgage insurance at all, as well as no funding fee, okay? And if you do have those funding fees were greatly reduced, okay? They were also greatly reduced for first-time use. So the first-time use funding fee on a VA loan is actually lower than that subsequent use funding fee, okay? Now, in addition to that, you have the entitlement. That entitlement amount, okay, can be utilized in different ways. Some of that entitlement can be used for your first home purchase. You can hold that property, right? Give yourself a nice low investment property and utilize your additional entitlement for subsequent purchases while having multiple VA loans out at the same time. Great option for your buyers. You can also use VA loans for multifamily homes. So if you have a active duty service member or someone who has recently gotten out of the military, Many stay in contract in the general area, so they may not wanna live in Fayetteville anymore, but if you guys have buyer's agents working in the Sanford area, and they wanna pick up a triplex and have their buddies who are still in rent from them, you've now become a landlord with no down payment. That's a fantastic benefit, right? These are people who haven't had the ability to build equity in a home, more than likely, right? Not saying all, many do. Many do purchase at their duty station as soon as they order somewhere. If they're in a good area, like our area, they get stationed at Fort Bragg, or they get stationed even in the Jacksonville area. Well, Jacksonville, you're right next to the beach. You hop on there, get yourself a little beach house while you're stationed there. Okay? None of those are bad ideas. They can even be out here just for training. As long as their training period is long enough and they have direct orders here, they can pick those properties up. On the agent side, that's great for you guys if you're aware of those opportunities. So not only are you helping them build equity, even if they're not gonna be in this area, that may be a property management opportunity or a resale opportunity for you as well. So lots of benefits with VA loans. From the lending side, there is nobody more flexible than the VA, right? Income documentation, self-employment, you do not need 2 years self-employment. You do not even need to have actively started your job. You just have to have a start date within 90 days of your closing date. The VA is the most flexible of trying to allow people with non-traditional job histories, non-traditional income types to qualify. They're also the most lax credit-wise. Like I said, there is no minimum credit score for a VA loan. We do wanna see 12 months of good credit history, okay? But you can also get exceptions to that as well. You can go directly to the RCA. They're also, and don't fight me, the most flexible with recertification of values, okay? If you guys go for an ROV directly to the VA, you can check the percentages. The likelihood that you're going to get an increase from the VA is significantly higher than going back on a conventional loan and asking for an ROV. Fun fact, you just have to know how to do it.
Yeah, in terms of benefits, I think with the investment property, I think the key is they have to live in one of the units, if I'm correct. So it's gotta be owner occupied, but after a year, if they move, they can rent that property, but absolutely no restrictions on that.
You don't have to do it for a year if you're a veteran,
Well,
or if you're active duty.
Yeah,
Yes.
your intent has to be the primary occupant when you buy it, obviously.
Yes, sir.
Duty stations change quickly. One thing I'm sure to explain to listing agents, we all make an assumption that you're putting zero down, you have no cash reserves to make up the difference if the house doesn't appraise. The reality is, because they're able to put zero down, they often have more in reserves than the average buyer. So oftentimes I'll ask my VA buyers for proof of funds. Maybe a checking account to say, hey, look, they've got proof of funds here, they can make up the difference if it doesn't appraise, if something comes up. So they're actually a stronger buyer. People make assumptions when you're putting zero down that may not be correct. So it's important as buyer agents to educate them. Let's see, I was thinking about
The IRRL is a great benefit as well. So this isn't for a purchase, but the IRRRL, because you know we're the military, we love acronyms. We call it an IRRL refinance. That IRRL refinance is the sweetest deal a veteran can get. Listen, their first VA loan to purchase their house was great, right? But you had to go through an appraisal and a past inspection and all that. The IRRL refinance, easy peasy, lemon squeezy. You don't even need an appraisal. It is really simple. As long as that veteran has made on-time payments on their current VA loan, we do not have to go check their income again. We do not have to reappraise that property. All we have to show is a tangible net benefit to that veteran, right? Showing that they are not spending more money, right? And this is a great protection for your veteran clients as well. Showing that they're not spending more money to, buy the rate, that they're not gonna actually recoup that. As long as we can prove to the VA that this is a true benefit for that veteran, and we're dropping their interest rate loan up, and we're dropping their monthly payment loan up, or getting them, the benefit that they need, they can do that IRRL super easy, very simple, and they can do as many of them as they would like. It's a great additional benefit outside the purchase.
Another benefit is typically, when you look at the loan rates, the VA loan rate is typically lower than the conventional conventional rate. So they're gonna save money right there as well.
Yes, sir.
So my final follow-up to this, beyond VA loans, can you talk a little bit about maybe grants or financial assistance programs outside of the VA loan that the buyers should be looking into?
Absolutely. So locally here, and many of you were in this room doing the same thing with me a couple months ago. So we've got some good benefit programs that are here. Now, there are some very specific grants from the government. There are some very specific grants from the state or from community groups that they can apply for. Those are gonna be very, very specific to that person, to the community group that they're applying for. But in general, on the real estate side, NCHFA is a great option. Okay, the North Carolina Housing Finance Agency has down payment assistance programs that veterans can absolutely utilize. Okay, you can use those in conjunction with a VA loan. Their best benefit is the mortgage credit certificate program. Now that mortgage credit certificate program is unfortunately, we have been warned, going away after 2024, 2025. So write your congressman because we wanna keep that because it's awesome. That is a $2,000, up to $2,000 annual tax credit every single year. Now it's specifically for first-time homebuyers in the state of North Carolina that haven't owned a property in the last 3 years. However, if they are a veteran, that is waived. Okay, they do not have to be a first-time homebuyer to get that benefit if they're a veteran. Veteran and active duty are two different things, okay? But if they're truly a veteran and they're buying in the state of North Carolina, as long as the property is under $480,000 and on less than 5 acres, they are able to add that annual tax credit every single year for as long as they have the mortgage. They can even do a refinance and keep that tax credit through their first refinance. Wonderful option.
And it's important to know about these programs, because not all VA lenders will work with these programs and know about these programs. I have a buyer right now using a VA loan under contract. He came to me with the USA pre-approval. And I told him the program, USA does not support that program, so he's now working with a local lender that does. So if he hadn't shopped around, if we had not, educated him about that, he would have known about it, he would have missed out. So don't assume, just because we're a VA lender, they're aware of all these programs and can get them enrolled in them.
Yep, a lot of them do require a special registration. North Carolina Housing Finance Agency is one of those where we do have to do additional education and be specially registered. Additionally, if you do have disabled veterans, right, who actually do have that 100% disability rating, in the state of North Carolina, they do get a property tax deduction. Okay, but the catch is, they have to actually go and apply for it, and they cannot apply for it until they legally own the home. So it's a great thing for you guys to follow up on with some of your clients on. It's that homestead tax reduction you guys may be familiar with for older residents of the state of North Carolina as well. We actually have 3 bills in the Senate right now that are being voted on this session. 2 of them are directly related to these property tax reductions, what we would like to do and what we have been pushing for a few years now in the state of North Carolina is to increase that property tax deduction. Right now it's $40,000 off their taxable property tax value. Okay, we want to increase that to $100,000. They just hiked all their property taxes up anyway, so now we might as well increase the benefit too. Okay, the other option that we have put forward in a subsequent bill is to try and get that to encompass not only 100% disabled veterans, but to also include Gold Star families. That is a family of a service member who was killed in action, or Purple Heart recipients, or we would love to get all 3. Okay, Purple Heart recipients do not always claim 100% disability. Some people fight their disability rating, especially older veterans who do not want to be labeled as disabled. They don't want to take money from the government. There was a lot of stigma about that in generations prior to myself. And so we want to try and expand that benefit as much as possible in both of those sectors. The third bill is actually for us mortgage lenders so that we can use the proposed property tax bill that we know our veteran is going to get when we are qualifying them for the house itself. Because right now, since technically you don't get the deduction until after you own the house and you apply for it, the way lending laws are written, we cannot use the proposed tax bill. We have to use the true full tax bill accounted against the veteran in their debt ratios. So keep an eye out for those 3 bills and please support them.
Thank you for that was great. My next question, what advice would you give to veterans about choosing the right realtor? And I think that goes hand in hand with how do realtors become attractive to veteran home buyers?
That's a great question. I think, with the changes coming this summer, we're being told that we need to be able to prove our worth and our value. And it's never been more important, but especially with veterans, it's important that you become an expert on the VA level. And the first step is being here today. So I thank you for being here. Get involved, know what the rules are about the VA loan. I'm amazed at your wealth of knowledge.
Just a big ol' intel.
That's amazing. So, I don't think you can go wrong here with Crystal. But as educate yourself on the VA loan benefits, and how it compares to other loans that may be available to them. Because they might be eligible, a lot of veterans have to live out in the country. So they may be eligible for USDA. So what are the pros and cons of USDA versus VA? Educate yourself on that. Make sure the veteran or active service member, they need to go to the VA and apply for their, what's the term? The eligibility.
Oh, the COE, we can actually pull those now.
Yeah.
So, we can pull it for them now, but yes, otherwise they have to go get it themselves.
Yeah, if you go get the COE, that's important, that's a first step in the process of getting a VA loan. And then also educating yourselves about the area you're in, what other other programs are available. Outside of that, we just discussed NC Housing is a great one, but I'm sure that there are others depending on various municipalities that you're working with. So educate yourselves on those. I would encourage you to get the MRP designation. If you have not served in the military, it does a great job of kind of educating you on the military lifestyle, things that are unique to military clients, some of the jargon they use, ETS, BCS, all those types of things. It will help you better communicate with them, improve your legitimacy to them if you're not a veteran. And you don't have to be a veteran to work with a veteran. I mean, it helps, but it's all about educating yourself, being aware of their lifestyle and the commitments and the sacrifices that they have made, and working with the best lenders out there that are educated on all these products that are available to them. And it may not be the biggest bank, like I mentioned, USAA. They don't work with some of these smaller programs. So it may behoove them to work with a local lender that is familiar with them.
So I have a lot of opinions on this topic, obviously. So genuinely, one of the things that is so important is that the person providing the funding to the veteran knows what they're doing, right? It is very important that you guys are working with a true, I can't say the word expert because we're not allowed to say that in the mortgage world, but someone who has a lot of experience. And when I say experience, I don't mean, oh, my bank does this. I mean that person. When somebody is talking about what their boss does or what's that person that you are utilizing, that your veteran is trusting, your service member is trusting, they need to understand how VA loans work, right? We already discussed there's no minimum credit score, right? There's no additional processing fees for a VA loan. There's no additional bank fees required for a VA loan. I don't charge any bank fees to my veterans at all. That's perfectly legal, right? So when you're seeing these things, if it doesn't sound right to you as the real estate agent, it is okay for you to tell them it doesn't sound right, okay? One of the things that is really important now, especially in the shadow of the NAR settlement, right? Many of you may already be aware of some of the things that are going on in the VA world. So up until 2 days ago, right, anyone using a VA loan has not been allowed to pay any administrative fees for a real estate broker. For an agent, they're not allowed to pay your EXP $300 fee, they're not allowed to pay any of that, and they're certainly not allowed to pay your commission. Okay, that has been the rule for at least the last 15 years, okay? As of 2 days ago, in the last 48 hours, if you're not on my mailing list, you should take my card and get one, because I emailed you guys already, okay? Effective August 10th, the VA came out with a new circular, and this is a temporary fix, right? This is not their permanent ruling, this is not a new law for them, this is a temporary local guidance, okay? But I'm gonna read to you verbatim what that local guidance is. Now, that local guidance that is effective August 10th is a temporary local variance regarding real estate buyer broker fees, okay? This regulation update is subject to the following. This means the buyer utilizing the VA loan can pay buyer's agent's commissions and broker fees as long as you meet the following requirements, and I think you guys will find in our area you do meet them, okay? The home the veteran is purchasing is in an area where listing brokers are prohibited from setting seller broker compensation through multiple postings, or buyer broker compensation cannot be established by or flow through the listing. AKA you can't put it on the MLS. Okay, buyer broker charges are not included in the loan amount. This is important. Please do not go post on Facebook that they can finance your commission. It cannot be included in the VA loan. Okay, buyer broker charges paid or to be paid by the veteran now need to be considered in determining whether the veteran has sufficient liquid assets on the underwriting side for the loan itself. Okay, now those are three pretty standard things that probably everyone you guys have worked with in the past could have been able to do. All right, if you have any questions on this at all, like I said, grab my card, shoot me a note. Happy to provide you with the full circular for that as well. They also just came out and rewrote the construction to perm program for VA, which is cool too. If you guys did not know that, you can absolutely utilize a VA loan to do custom construction, to build on your own land or to buy land and build on it from scratch with a custom builder or with a manufactured modular builder. VA absolutely allows us to do that as well, which is another benefit that you guys can throw out there, especially if you're listing land in and around a military heavy area.
I want to circle back on something you said quick, Jim. You mentioned about living maybe farther out in the country. Are there certain areas in Wake and Harnett County that you have found to be more receptive to a VA loan?
Well, I think it's certainly the further south you go towards Fort Bragg, you're gonna find a lot more sellers and agents who are veterans that are familiar with that and are much more open to it. So, and a lot of them, if they're stationed there, maybe they go in there for reserve duty or something. And obviously, those are some lower cost areas too. Harnett County certainly is a great area. It's going very fast. Prices are going quickly, but still is a great value compared to Wake County. So I would focus them on those areas, and don't be afraid to go down there because that's the future. Harnett County is exploding. If you have not been down there recently, you will not recognize it. There's 4 tobacco fields now are full of new home communities, and more are coming up all the time. And one thing I failed to mention in the past, a benefit is don't assume because the veteran is going to school that they can't buy a house. I had a Gulf War veteran on a GI Bill, was working on his bachelor's degree. The GI Bill, Gulf War, has got some great, it covers your living costs. It gives you money to pay your bills and your rent and everything else. He qualified to purchase a townhouse, brand new. Now it was back in like 2018, so it was like 160,000. But he bought the house using his VA benefits as income. So just because they're not working, don't assume they cannot qualify for a VA loan.
I'll just piggyback off that. So just to be clear, because he mentioned 2 different benefits there. The GI Bill benefit and military disability benefits are 2 different benefits. GI Bill benefits cannot be used to qualify for a mortgage loan. However, any other benefit that the VA provides, like a pension, disability rating, anything to that extent, not only can we count it, we can actually count 125% of it. So it is just like your Social Security, right? It is a standard form of income. It is very easy for us to look at. Veteran doesn't even have to receive it yet. So if they just got their rating and they said, hey, actually, I got my rating packet, I'm getting a 70% rating, but you know, the VA hasn't paid me. The VA is notorious for back pay, right? 9 months later, they'll get a $50,000 check in the mail because they forgot to pay them for the last 6 months. Okay, we can utilize all of those funds. I just want to make sure the difference between the VA benefit and the GI Bill.
Thank you for that important clarification.
No problem.
I wanted to circle back on something we talked about briefly earlier. We talked about unique financial situations. You mentioned, I think, Tim, about showing their checking account. what steps can veterans take to improve their credit and financial readiness and, like before purchasing a home? Is there anything specifically that you would encourage them to do, and maybe a realtor can encourage them to do that prior to purchasing a home?
Please don't tell people you need $0 to buy a house in the state of North Carolina. I am all for, let's get all the seller paid closing costs we can, 0 down, it's awesome. But you guys live in a due diligence state, and if you tell somebody they can buy a house with $0, they're usually not in the right mindset to understand that, like, they have to have some cash reserves. We as a bank would like to see that they can make their mortgage payment with the money that they currently have. One of the great things that the military has actually enacted for a number of the service groups, especially the Marine Corps and the Navy recently, they've actually started requiring, instead of you having a TSP election like we used to have, and having your pension set up differently, they've now transferred that with a required, as part of their pension plan, they do a 1% match to the veteran, or to the service members if they're active duty. They're actually putting that money away, and you can see it right on their LES. So when we pull their LES, which is their version of a pay stub, it gives us a breakdown and essentially says, hey, you're putting this much away every single month into your retirement. Well, a good VA lender will pull their LES, look at that pay stub and go, okay, I can use this to show cash reserves. I can use this to show that my veteran is saving. Even if that person really isn't saving in their own checking or their savings account, you can utilize that as a compensating factor to make that veteran look better to the bank. Good thing for sailors and Marines now is that they don't actually have to do anything because they're required to do it anyway. But you can always utilize things like those TSP thrift savings plans, is the military equivalent of like a 401k. Letting them know what's in their credit. I will always say the first step is getting them to a mortgage lender who works in this community, right? There is the SICRA, it is the Service Members Civil Relief Act. I'm not sure if any of you guys have heard of that, but that Service Members Civil Relief Act is actually like a credit act, like through FICRA, which essentially says that if a service member is actively deployed, on deployment, even just in the field for an extended period of time, you are not allowed to put negative credit reporting information on that person while they are actively engaging in military operations. So what happened, not as much now since we're not quite as active overseas as we were, but during my time in, I was in from 2011 until 2016. So I was actively part of Operation Enduring Freedom in Afghanistan and Iran and Pakistan. We had so many guys that would go over with us and wouldn't pay their gym membership. They wouldn't turn their gym membership off. Their gym would send them into collections while they were on deployment. Netflix accounts, cable bills, utility companies where, you know, they thought they had something turned off and it wasn't. And because of that, that's why the Service Members Civil Relief Act came into play. So when we look at a credit report for a service member or a veteran, we can look back and go, hey, my guy, like, why do you have all of this bad credit all happening at the same time? What happened? They'll be like, oh, I was in the field, you know, my wife didn't know I had to pay these things, and I was in the field and I didn't tell her, so we got time. So I've got 6 late payments in a row. Well, we can use that Service Members Civil Relief Act to go fight that for them, to go get that removed from the credit bureaus. That can dramatically increase their credit scores, but in addition to that, remember, VA doesn't care about credit scores. That cleans up that 12-month credit history that the VA wants to see. Okay, that's the explanation that they need to have. And this is information that's public and open to everybody, but it's just things that people don't necessarily look at, especially if you're working with like an online bank, as rates are going to continue to go down. As they continue to go down and the rates get lower, there's going to be more and more people being blown up to go online to buyahouse.com, and all they're going to do is run their credit and tell them that they can't buy it. So don't let them do that. Send them to the right people first.
Yeah, veterans are no different from other clients. I don't think it's ever too early for them to speak with their lender. You know, what their credit is, what issues are out there that they need to get resolved to help improve their score. So the earlier you get them, the better off they're gonna be.
That's a quick question. It used VA took longer to do a mortgage. So what is the time frame for, can you get a VA loan in 30 days, or is it 45?
The VA doesn't do mortgages. So I think that's one of the kind of misunderstandings with VA. The VA doesn't have anything to do with the VA loan. My VA loan took 18 days. The only thing the VA has anything to do with is the ordering and administration of the appraisal. That is all. A loan does not go to VA, the VA is not involved in it. You pull your COE from them, and then you order your appraisal. Now, when you order your appraisal, that is dependent on your county. You have a set turn time from the appraiser, and that's set by VA. And we've actually got a little timetable that we can send you guys over. It's on the RCA. Our RC is in Atlanta. That's the regional center that controls our area. And they have that posted for real estate agents specifically, so you guys can keep tabs. Because what we hate hearing is someone going, oh, I have this VA appraiser, and they're taking 25 days to do this appraisal. They are absolutely not allowed to do that. The process internally with your lender, the way it works is your lender is gonna go in, your lender is gonna order that appraisal, okay? In Wake County, you have a 10-day period. So let's say we're all buying houses in Wake County. We go in, we order your appraisal. If I order your appraisal today, it gets input into their system. They have 24 hours to assign that to an appraiser, okay? Once the appraiser receives the assignment and accepts the assignment, then their clock starts for whatever county the actual house is in. So if we're in Wake County, right, that's gonna be a 10-day calendar. Now, this does not include weekends or federal holidays. So for us, if we were doing this today, right, we'd skip Juneteenth, we'd skip the weekends, and that's where you start your count. The problem is, especially with online banks, people you're not directly working with, oftentimes those appraisals are not ordered until the loan is in processing with a processor. And so if it takes, you've got a slower bank or maybe a very busy bank that's understaffed, if it takes a week or so to get to processing, then the processor orders it, then you have a 10-day turn time. That's when you're pushing those longer, it doesn't take any longer to process a VA loan, it's waiting for that appraisal that you cannot rush. Now, the side note to that is if Tidewater is invoked, right? Tidewater protocol has nothing to do with water or flood zones at all. I say that, somebody messages me every time and says, well, this isn't in a flood zone. It is, the military loves cool nicknames for things. So when the appraiser goes out to a property and believes that you're not going to get the value that is on the purchase contract, instead of just going like a conventional loan, hey, here's your evaluation, here's your value, and you have to go back and fight them with an ROV. They essentially allow you ahead of time to go, hey, no, it should be worth this much because, and you provide that same narrative just like you would with an ROV on a conventional or an FHA loan. You provide them with that narrative and you provide them with some comps, right? 3 to 6, there's a comp grid that you guys can fill out. You go back to the appraiser with that. Evoking Tidewater protocol technically gives them an additional 5 days. It is a 48-hour rebuttal period followed by a 3-day review period. So if they were just really not great appraisers and they didn't want to do the job and they were trying to add some additional time, they could, in theory, evoke Tidewater protocol, just give them extra 5 days to write the report. But we like to think that people wouldn't do that. Unless you're one guy in Jacksonville that I know.
So, I have a couple other questions, but we're running,
I know, I told you I could have talked about this all day by myself.
we're running a little short on time, so I'm gonna shift gears and I wanna make sure that we get all these questions answered
Absolutely.
first. So I saw a hand go up in the back there, you're first, and then over here will be second.
So, thank you for help us today. I have been helping veterans, but unfortunately, I was not involved in the process just because
Thank you.
I wasn't involved in the process because I have these, clients that they want to do everything, and I'm just like, okay. So that's why I didn't learn much. And I just want to know if the same like FHA loans, my understanding, and correct me if I'm wrong, FHA assigns a number, a case number, and then if something happens and falls through and you go with another lender, technically sometimes they have to cancel that case and do another one, or you know, that type of things. I wanna know if with the VA loans, it is the same case or not.
Yes, so there are case numbers for VA loans. So when you have to order your case number through the VA when you're actually ordering your appraisal. Those case numbers are always tied to the appraisal, just like with an FHA loan. Now, whether or not the value follows is a little bit different. So if your veteran were to go under contract, right, they order a case number, and then they go, oh, I don't wanna buy this house, well then that case number is canceled. If your veteran goes under contract with USAA, and then they go, oh gosh, I really don't like this lender. I'd really much rather get an MCC and use a local lender, and here I've got my guy, I'm gonna use Michael Martin. Well, Michael Martin can just get that case number transferred. They do not have to cancel it, they do not need to pull a new one, they can do that request. The same way you can transfer a VA appraisal is the same way you can transfer an FHA appraisal because it follows the case number between lenders, not between buyers.
I got another one over here.
How many days for closing do you suggest people offer to purchase?
So what I suggest is that you guys talk specifically to your lender. So I will tell you, I have some really great agents who work specifically in Fayetteville and Jacksonville, and when they're trying to be competitive, even within a heavily saturated VA market, we can be more competitive because again, we know how to do these appraisals. We know how to work this process. So I will get on the phone with my agent, I'll pull out my phone, and I'll go, okay, if you're making your offer on Thursday, and we're not gonna get an executed contract back until Sunday, right, then my buyer's gotta sign his disclosures on Monday. If you swear he's gonna sign them on Monday, then I can order the appraisal on Monday, they'll accept it and assign it on Tuesday, my clock starts Wednesday, we've got a holiday Thursday, so when is 10 days past that? And then I try and give you that tidewater period. I like to say, hey, you know, just know I put 3 to 4 days buffer at the end of that 10-day period, God forbid you have a tidewater. Now, if we think we're gonna get into, you see the house, right? And you're like, there's probably gonna be some repairs on this, right? You guys see it, you guys walk the property. I can't tell you how many agents will message me a video of a property they walked because it's got a barn or a shed in the back, and they're like, hey, what is gonna get called on this? Now, I can't tell you what the appraiser's gonna call, but I can take a look at your video and go, yeah, like, let's go ahead and pad our closing date with a week to get those repairs done, right? And let you know you can start having those repair conversations prior to the appraisal coming back and just going, hey, we're pretty sure this is gonna get called, right? If you know they don't have an outlet cover on something, go slap a $1 outlet cover on that before the appraiser did say. But so you can do them, like I said, my loan was 18 days. We did not have tidewater, but I did have repairs. My agent was great. She went out and slapped $1 outlet covers on and my house was good to go. 30 days is pretty standard. And unless you are buying a house over Christmas or Thanksgiving where you got a whole bunch of federal holidays, I'd say there's no reason you can't close in 30 days.
Put your hands up, please, if you have a question. I see one over there.
Yes, thank you. Have a couple of different questions, I'll try to wrap them up into one. So I wear a couple of different hats when it comes to working with military and veteran home buyers. I am a real estate agent, but I also have a full-time job as a DoD contractor, as a financial educator, working with the military. So that's my job is to get them ready to come and see you. So, couple of questions. When you're looking at the income, and I primarily work with the reserve component, the National Guard and reserves, because that's what's in this area. What do you look at in terms of income? So like if they have bonuses coming up, but that bonus is not gonna hit for like a couple of months. Or if they are National Guard, but they're gonna be activated, they have orders, they're gonna be on orders for a year. What are you guys looking at in terms of what type of income you can use to qualify them?
So, I love my National Guard, I love my reserves, it's great additional income. We can gross up any of the non-taxable income the same way we do for active duty, so anything that they're getting, BAH, BAS, can be grossed up. So if they are on activated orders and those dollar amounts go up significantly, that's great, we can always utilize that. If they're on true activation and not just like, I drilled this weekend, if they're on true activation, we give them their full rate of pay. So it's no different than when they were on deployment, and I have a number of reservists whose wives cannot wait for them to go on deployment because that means that they can finally sell their house. Because they're able to utilize that additional income, because the spouse is not on the loan for whatever reason, and we can't count their income. I've actually done a few of those up in Durham. The police department up there has a number of veterans that are still reservists. Those are great opportunities. Any additional pay, like if they get flipple pay, flight pay, hazard pay, all of those pays can be counted as long as they're actively being received. Now, if they're only drilling, right, and they maybe got activated to, go serve for a security detail, or to go fight a wildfire, or there's a flood or an emergency, we do give them credit for that in their averaged income. They're not gonna get that same rate of pay because we know it's gonna stop as soon as they're back from the fire. So if we see those fluctuations in pay, we can absolutely utilize that as long as they have a history. Now, if they just got started and they've been in for 3 months, that's a little bit different.
Of course. And then my second question is, I work with them in terms of money management and making sure their finances are in order before they go. Debt to income wise, now I'm encouraging them to get that debt level, of course, down as low as they can. But what are you looking for when they come to see you as a lender as far as that debt to income?
So, Michael Martin, don't fight me, and anyone else who's a lender in the room, don't fight me. I've got veterans that, we do VA loans over 60% DTI. I just closed one last month, 64% DTI. Again, has other income in his household as a compensating factor, she just wasn't on the loan. But you can push those DTIs significantly higher. Important is gonna be your front end, right? It can't be all housing debt, but if they do have that personal debt, that front end ratio, we like to keep that front end ratio around 45, 47. But the back end ratio, as long as the front end ratio is low, that back end ratio can go pretty high.
I just have a question about the RRAR refinance. I did 2 veterans and they want to do some construction into the house they just moved in.
Mm-hmm.
How long do they have to be in the home before they can do a VA refinance or either the VA loan construction?
Yes, so if they're already in a home and they wanna do what is essentially renovation, right? They wanna fix the kitchen, whatever. So there's a few different ways they can do that. You can do a VA cash out, right? You can do a cash out refinance, and that's fine. Usually you wanna see 6 to 9 months payments before they're doing that, similar to any sort of cash out refinance. Other than conventional, you guys need 12 months on a conventional. But so that's a great option. Now, there are some great options here locally for renovation lines of credit, where they would not actually be altering that low rate VA loan. They'd be able to take out a personal line, not a HELOC, a personal line of credit, and that's a renovation line of credit up to $70 or $75,000. And I can give you a great contact for that as well. Her name's Julie Rush, she's fantastic. She works with me at the Bankers Association. I have had a number of folks, if they want $20,000, $30,000, go get that renovation line of credit. It's quick, it's easy, and it does not alter that good low interest rate they have on the VA loan.
We've got time for a couple more questions, so if you have one, let me see your hand, please.
So I want you to tell me a little bit more about the grant NCFH down payment assistance program. And also, if a veteran is in an apartment, is there some type of benefit that will release them or pay whatever the penalty is to leave an apartment early?
So, unfortunately for veterans, there is not. If they are active duty, they can leave whenever they want and they can't get charged anything. They can break their lease at any time if they are active duty. They do not even have to have full new orders yet. So again, if they're active duty, that's different. If they're a veteran, unfortunately, you're a veteran, you're a civilian now, you can't break those. If they're a contractor, if they're relocating, oftentimes apartment complexes will go, okay, well, you're relocating for work or whatever, so like you have to move. And sometimes they will work with you, but that's a privilege specifically federally only for active duty where they can break their lease. Now, the North Carolina Housing Finance Agency is a fantastic agency. Like I said, not all lenders can work with them, but we have a number of lenders in Raleigh that can. I teach classes for NCHFA. It's a great program. They have 2 different down payment assistance programs as well as that tax credit. And again, go complain that we're losing the tax credit, because it's awesome. But the two programs for down payment assistance are a $15,000 down payment assistance program and a 3% down payment assistance program. The $15,000 program is much more restrictive, okay? That is only for people who have not owned a home in the last 3 years or veterans, okay? It's gonna be more restrictive on their household income, the way their income is calculated. There is an income limit for our veterans. Any disability income does go towards that income limit, even though it is non-taxable. The 3% program is fantastic because it's not specific just to first-time home buyers. Your move-up buyers can absolutely use this program, okay? You can utilize that 3% program as long as the property is under $480,000 purchase price. North Carolina Housing Finance Agency is a great option. The income limits are calculated differently for that 3% program. It's open to a lot more people. Because it's open to a lot more people though, the interest rate on that program is higher. And North Carolina Housing Finance Agency has that posted directly on their website. It updates like every 10 minutes. You'll see the little screen will flash and the chart will change if you leave the page up. But you'll see all the different pricing for the $15,000 program and the 3% program for conventional loans, USDA loans, FHA loans, DPA loans. The one thing I will say, you can absolutely use that $15,000 program for a veteran, okay? If your veteran is putting 0 down and you're doing a loan program that is 100% financed and you have a silent second lien for $15,000 and your appraisal does not come in at a higher value, you now have negative equity in that property, okay? That is a conversation I have specifically with any single person who's utilizing the NCHFA programs. As a real estate agent, if you guys are working specifically with military people, I would highly recommend that we have a conversation so that you are also having those conversations. Because the worst thing that you can do is sell a young soldier on this program because it's great and he can get $15,000 and then he gets cut orders in 6 months and he's not keeping it as an investment property, and now you have to go and sell it and you know that it only appraised for the appraised value and he owes $15,000 more on it. And that's a situation I will make sure my agents don't get into and my clients don't get into unless they're fully aware that God forbid something happens and they have to move, they're gonna keep that as an investment property and get their equity out of it.
Crystal and Tim, this has been awesome, and I know we've all learned a lot. Obviously, we focus a lot on the challenges of somebody qualifying, but go to the other side. We often see in a higher end property, a veteran just hell-bent on wanting to use their benefits, and it does scare off listing agents, as Tim replied to, but are there things we need to be aware of as we get to the higher end properties and people putting down more money? Is there any challenges within a VA loan, or are there caps, or they're on the high end?
So banks will have their own caps. So a lot of the VA loan amount caps were lifted, and that was under the Trump administration. Those were lifted and the funding fees were changed as well. For us personally, my construction to perm program is fantastic. I've got veterans that come in, they want to build a house on the beach because they retired in Jacksonville, which is awesome for them. So they've got a nice house on Emerald Isle that they're building now and it's $2 million, right? That's great. Your lender may impose certain fees on those. If you want a $3 million house, now I'm gonna require a little bit of collateral, like you gotta put some money down, right? VA is only gonna guarantee a certain portion of that coverage. When we say a VA guarantee, what that means, it's very similar to your HUD guarantee. What that means is if you, as the buyer, default on that property, the bank who did the loan for you, the bank who's holding that loan, they don't get called for all that money when you foreclose. The government is gonna pad that, and the government's gonna take some of that hit for the bank. That's why you're able to do these loans with lower credit scores. That's why there's no PMI. That's why the interest rates are lower on those programs, because the government is saying, hey bank, we want you to help this population, so we're gonna take some of that hit. Now when you get into high-end properties, you can absolutely do 0 down on $1 million house in Wake Forest and Chapel Hill all day long, 1.2, 1.6. At that point, your individual bank may impose some additional fees, but you know, construction loans, you can build 0 down as well.
Got time for 2 more, I think. Go right here.
First of all, on behalf of our RRAR, thank you for doing this presentation today. great information. What is the one thing that you would want the average agent who has not worked with the VA client, a veteran, what would you want them to know as a thing that they've got to be aware of, that is just something that they have to know, that they must know?
Well, there's a lot of intricacies in the VA. Well, the one thing that I haven't mentioned yet is that if the appraiser does flag some repairs that have to be done, and I said it doesn't happen often, but it does happen. I had an example back in 2017. It was a house in Cary, sold for $200,000, so it's a long ago. The deck had to be replaced. All the deck boards were shot. So what we worked out is we figured out the cost of lumber was $600. We got the seller to agree to pay for that on an agreement to make contract, and my client, his father, and I spent a day replacing those deck boards. That they will require those repairs be done before the closing. That is a deal breaker. If the roof doesn't have serviceable life, I don't know, is it 2 or 3 or 4 years, they could potentially require that roof to be replaced prior to the closing. So look at the roofs. I thought for sure they were going to require that on one, and they didn't. But that roof would have to be replaced. Who's going to pay for that? The seller's under no obligation to pay for that. So in that case, your buyer's got to pay for it or come up with the funds, and it's got to happen before the closing, or you won't close, and that buyer will forfeit their due diligence fee. That's a worst case scenario, but that is a potential thing. One thing we haven't discussed yet, that one we have to be aware of. I'm sure that the rest of it.
I would say my biggest thing is just make sure if you guys, just like with any other product, if you guys are not super familiar, you have to know that these loans are different, right? The same way, if you get a crazy pre-approval letter from some crazy bank and they're using the coolest loan, right? You probably should go, I don't know that loan type, I need to ask some questions, okay? VA loans are a fantastic loan program. They're a fabulous benefit. These people have earned the right to have this. Not everyone who served in the military has entitlement to use a VA loan. I meet a number of people who served in the military and they can't use a VA loan because they don't have that entitlement. It is an earned privilege that they have, and if you want to be part of the movement that is allowing them to utilize that in our community, all you have to do is have a partner who you can ask these questions to. Just like condominiums have different rules, manufactured homes have different rules. There's a subsection in each of those property types for VA. You can do VA manufactured homes upside down, sideways, and backwards as long as they're double wide and not in the flood zone. You can do VA condos. They just have to be on the condo approved list. And if you have any questions about that, reach out to a partner who understands this so that you guys know before you're going under contract, hey, is it on a well? Make sure you get that well test. Hey, make sure that you've got that pest inspection, or if it's new construction, you don't need that pest inspection, but that builder does need a VA builder ID. And if they don't have it, you can't close, but if you know you need to ask for it, if they don't have one, it takes 48 hours and they don't have to pay any money and I can register them for you right there.
All right, any more questions?
I'd just like to add what Crystal was saying there a second ago. As a real estate agent, especially if you're a newer real estate agent, and your buyer's coming in and telling you that they're using whatever XYZ mortgage company, especially for VA, they tend to use Navy Federal or USAA, some of these companies that don't have a local presence. You are not doing your buyer any favors by not introducing to somebody local. You are absolutely, you do not realize it, but you are hurting your buyer. These folks at USAA and Navy Federal and all these other companies that are out there do not understand due diligence in North Carolina at all. And your buyer is going to have a lot of money at risk if they didn't do their full due diligence on helping your buyer through the process of explaining what happens if you have come in at the low appraisal. That due diligence is real money that will be gone. You are not serving your buyer if you do not introduce them to somebody locally.
Thank you. All right, we would like to thank DEI and GPIC and RRAR for being able to put this on today. Thank you. And most importantly, thank you to Tim, thank you to Crystal, and thank you for your service. We appreciate it. Thank you so much.
Are you, sir?
50-month lock prior payment. Yeah.